So, children, now in our last class, we have completed a partnership, sole proprietorship business. So, where in the sole proprietorship, we have seen there was only one man owner, a single proprietor owner. Partnership, when we came in the partnership, more than one, minimum two, and maximum is 20 in case of the general business concern and 10 in case of the general banking concern. So this is the number of member in the partnership. 2 is the minimum number of member in partnership, and 20 is the maximum number of partnership in the number of person in the partnership in the general business concern, and 10 in case of the 10 number of persons should be there in the banking concern. So this was in the partnership form of business. Now we are coming to the joint stock company. A company is a very huge business. So if you see the definition of the company, company is an artificial person created by a law having a separate legal entity with a perpetual succession and a common seal. So this is definition of the joint stock company, a company. So, but before you have to by heart this definition. Joint stock company is an artificial legal person created by a law, having a separate legal entity with a perpetual succession and a common seal. So this is the definition you have to learn by heart. Definition of commerce, or definition of a company. So now explanation of what is a company. A company is a very big business house, a very giant business house. So the capital of the company is collected by issuing the shares in the market. The company issue the shares in the market to accumulate their capital. The person who buy the share of the company, they are called as shareholders. They are the investor of the company. They invest the money in the company. These shareholders are the owner of the company, and they get a dividend. Dividend means a part of the profit of the company declared to the shareholders in the form of dividend. So this is a dividend is a part of the profit declared by the company. So in this way, the shareholders, they get a dividend, a part of the profit from the company. So in this way, this company is a very giant company, a very big company than the partnership. So if you see, there are different types of company, but for you understand that there are two types of company. One is private limited company and the public limited company. One is private limited company and another is public limited company. So anyway, both private limited company or public limited company, both are the private enterprise. Both are coming under private enterprise. One private limited company or public limited company. Both objective is to earn the profits. Their main motive is to earn the profit. They are under the banner of private enterprise. It's not public limited company, is not private sector, public enterprise. Public limited company and public enterprise, these two are very different. So public limited company, they are limited company, public limited company and private limited company. Both are under the private sector. Both motive is on profit, but there is a difference between the private limited company and public limited company. So private limited company, they do not issue the shares in the market. So, but whereas public limited company, they issue the shares in the market. Anyway, so that is not in your syllabus. Also, just for you to understand that there are different types of company. One is private limited company, another is public limited company. So this is joint stock. Both are joint stock company. So we are doing a company. So company is in a very big business house. So they issue the shares in the market for their capital accumulation. So they collect the capital, they accumulate the capital by issuing the shares in the market. So those person who buy the shares of the company, they are called shareholders. They are the owner of the company. They are the investors. They are called as shareholders. So they get dividend from the company. Dividend is a part of profit declared to their declared to the shareholders by the company. So in this way, the company is run by the directors, the board of directors. board of directors is a set of directors. So these directors run the company. The directors are the brain of the company. Those shareholders are the owner, but shareholders do not run the company. But here in the joint stock company, the directors. So collectively, these directors collectively they are called as a board of directors. This board of directors they are the brain of the company. They run the company management. They look after the day-to-day affairs of the company. Day-to-day workings of the company are looked after by these directors. So each and every power holds in hand of the director, so they are known as a brain of the company. So these directors, so they manage the company, they run the company, they take the decision, they have a supreme power. The directors, they have a supreme power. So in this way, this is about the meaning of the company. So you don't have to go through detail, just you understand it that joint stock company, a company is a very big business house, so where they issue the shares in the market to accumulate to collect the capital, and those who buy the share of the company, they are called as shareholders. These shareholders are the owner of the company, and they get a dividend from the company. So company issue the shares. So what do you mean by shares? Shares is the unit of capital of the company. The total capital of the company is divided into number of units, and each unit is called as shares. So in this way, the company issue the shares in the market to collect the capital for the company. So those who buy the shares, they are called as shareholders. These shareholders will get a dividend from the company. This company is run by the board of directors. The supreme power of the company holds in the hand of the board of directors. The board of directors run the day-to-day affairs of the company. Those shareholders are the owner of the company, but shareholders do not run the company. Company is run by the board of directors. The supreme power is in the hand of the board of directors. So this is a company. The definition of the company is an artificial person created by a law having a separate legal entity, with a perpetual succession and a common seal. A joint stock company is an artificial legal person created by a law having a separate legal entity and a common seal. So in this way, this company is an artificial legal person. We'll go to the features of the company. We'll learn all this from this definition. A company is an artificial legal person created by a law having a separate legal entity with a perpetual succession and a common seal. So this is the definition of the company. So now next is features of the company. The features of the company is separate legal existence. A company has a separate legal entity, independent legal entity from its member. Though the shareholders are the owner of the company, but the company do not run the management of the company. The shareholders are the owner, but the owner do not look after the management of the company. The management of the company is looked after by the shareholders. The company hold every property in its own name. Company make a contract. Can company file a case to any outsiders in its own name? So shareholders are not the joint owner of the company's property. Shareholders, though they are owner, but they are not the owner of the property. So shareholders cannot be held liable for any act of the company. If a company does any wrong, shareholders are not liable. So there can be a contract between the company and the members. So there is a company and the member, there is a contract between these two. So in this way, company and the shareholders there is separate legal. Their company is one entity and shareholders are another entity. So these two are two different entities. So in this way, and there is perpetual succession. Perpetual succession means company is created by a law, and only law can bring the end of the company. No one can bring the end to the existence of the company. The company goes forever. Once it is birthed, once company is formed, after the registration, no one can close the company. It has a very, very, very long life. It is permanent. Its existence is permanent in nature. That's why the shareholders may come, the shareholders may go out, but the company goes forever. So this is a perpetual succession. Perpetual succession means company has a very, very long life. Company do not end easily. So company is created by a law. Only law can bring the end of the company. Rest, no one can stop the company from its functioning. Company goes on. Shareholders come, shareholders go. The shareholders are the owner. The owner of the company are shareholders. Shareholders may come, shareholders may go out. How the shareholders will come? They will buy their shares and they will enter the company. How they will go out? They will sell their shares and they will go out. Shareholders may come, many shareholders come and go day to day, every day, but company goes forever. The life of the company is permanent. It will not come to halt. If any shareholders die also, shareholders are the owner. They will not, company will not stop, company will go forever. The life of the company does not affect by any death of the shareholders. So it continued to exist even if all the members die. If all the members die also, the company continue its existence. So member comes and go, but company goes forever. It will not close. So this is the perpetual succession. The life of the company is permanent. It will not die. Company will never die. No one can close the company. Company can be closed only by law. Only law can close the company. Rest, no one can close the company. The life of the company is permanent. The owner, shareholders may come, shareholders may go, but company goes forever. So this is perpetual succession. Another is limited liability. The liability as the shareholders has a separate legal entity from the company. The members are members. The company's debt cannot be held to the shareholders. Shareholders are not liable to pay the debt of the company. If company has taken a loan from the bank, shareholders, the owner, are not liable to pay that. It's the debt of the company because it is not the debt of the shareholders. So that's how much the shareholder has invested, that much only the shareholders are liable. Risk. The risk is limited up to the number of shares purchased by the shareholders. Suppose I am a shareholder of one company, Reliance company. I have purchased 1 lakh rupees share. So my risk is only 1 lakh, not more than 1 lakh. If I will buy 2 lakh share of the Reliance company, my risk is only 2 lakhs, not more than 2 lakhs. So the risk, the liability of the shareholders is up to the share held by the member. Each member, how much share he purchases, that much is only his liability. That much is only the risk of the shareholders. But in the case of sole proprietorship partnership, if there is more loss, the owner has to sell his property, his house, his building, his car, his land. He has to sell and to cover the loss of the business. But in case of joint stock company, if there is a huge loss also, shareholders is not shareholders not liable. So shareholders do not have to pay. So because the liability of the shareholders is limited up to the value of the share purchased by him. If I have purchased the 1 lakh share of Reliance company, my risk is only 1 lakh, not more than that. If I have purchased 2 lakh share of the company, my risk is only 2 lakh, not more than 2 lakh. So in this way, another is transferability of the shares. The shares are freely transferable, but this is in case of the public limited company only. In case of public limited company, so if you see the company, there are two types of company. One is private limited company, another is public limited company. But both this private limited company, public limited company, both are under the private enterprise. Please do not get confused with the public sector undertaking. Public company and public sector undertaking are totally different. So we are talking about the joint stock company. The company is up to company. They are company, private limited company and public limited company. Private limited company do not issue the shares in the market. Public limited company issue the shares in the market. This is the joint stock company. Both are private limited company or public limited company. Both are a joint stock company. So only public limited company issue the shares in the market. Private limited company do not issue the shares in the market. Shares in the market. So, but anyway, both are a joint stock company. So this company issue the shares in the market. But particularly, you have to say when we say company issue the shares in the market, in bracket you have to write public limited company. Okay, because private limited company do not issue the shares. There is a difference between the private limited company and public limited company, but that is not in your syllabus. Okay. That is not in your syllabus, but for your understanding, when you talk about the transferability of the shares, shares are freely transferable. Suppose if I have a shares, I can sell to anyone. But in case of partnership, if A is a partner, ABC is a partner. If A want to go out, he cannot sell his share to outsiders and go out. He can sell it, but he has to take the consent of other partners. But in case of joint stock company, I am a shareholder. I can sell my shares to anyone and go out of the company. But this will not happen in the case of partnership. As sole proprietorship is not possible because only one man is there. In case of partnership, ABC is a partner. ABC is a partner. If A want to go out, he has to take the permission of. If A want to go out, if A want to go out and sell his share to D, in place of A, D is coming. A cannot call D in his place. He has to take the permission of B and C. Similarly, B wants to go out and B, in place of B, D is coming. B cannot call D in his place. He can call it, but he has to take the permission of A and C. Similarly, C also. C is a partner. C wants to go out, and in place of C, C wants to bring D. C can bring to D, but C has to take the permission of A and B. So there is no transferability of the shares. Shares cannot be easily transferable. But whereas in case the company, I am the shareholders, I am the owner of the company. If I want to go out, I can sell my shares to anyone and go out of the company. These shares are freely transferable, but in case of public limited company. So in this way, this is the transferability of the shares. A common seal. As I said, the company is an artificial person. Company is a person, but artificial person. Why company is an artificial person? Because every person, company is just like a person. Company is an artificial person. Company has its name. Company holds every assets and liabilities in its own name. But company is an artificial person because it cannot. It is not a real person. So it acts like a person. That's why company is a separate legal entity, a separate body. So in this way, company company has no hands to sign. All the official documents of the company, company seal is used. The name of the company is engraved in the seal of the company. That seal is used in all the documents of the company. It is a substitute of the signature of the company. That seal will make the validity of the documents. That documents will become more valuable when the seal of the company is inserted. When you put a seal in the document, that documents become more valuable. It has validity. So this seal acts as a signature of the company. And this seal is in the hand of directors. Okay, so this is a common seal. In this common seal, the name of the company is engraved. And this seal is the name of the company. Suppose is a XYZ limited company, XYZ name of the company, XYZ limited company, and the logo is there, and that seal is made, and that seal is utilized in all the official document of the company. So in this way, this is the common seal, and this seal is utilized in all the official document. So in all the official document of the company. So another, we have a separation of ownership and control. As I said, the owner of the company is shareholders. Shareholders are the owner of the company, but who runs the company? Who runs the company? The company is run by the directors. These directors are called as the board of directors. This board of directors run the company. The shareholders are the owner, but this owner do not control the company. The company is controlled by the board of directors. They are the brain of the company. They hold the supreme power of the company. So there is a separation of the ownership and control. Ownership is shareholders, control is in the hand of that board of directors. So that's why all the members do not have any right to go to the management and do whatever he likes. Whereas in case of partnership, every partner can go in the business and inspect he can go through each and every corner of the business. He can cover any area of the business. In case of partnership, he can visit anywhere in the partnership. He can visit any account statement. He can go thoroughly. He can see any sale, purchase, how much sold, how much profit and loss, how much business earn a profit. The partner can see anything in the business. But in case of a company, shareholders, because partners are the owner of the business partnership firm, but owner can do anything there. But in case of the joint stock company, shareholders are the owner, but shareholder has no right to do anything in the company. In the management of the company, shareholder has no right to do anything. Only company director is there. Directors are allowed to do anything in the company. They have the supreme power of the company. So that's why there is a separation of ownership and the control of the company. Owners is shareholders, but control is in the hand of the directors. So voluntary association. So voluntary association means company is voluntarily associate of certain person formed to carry out the particular business in a common. So purpose of a member of the company can join. It leaves anytime of their own free will. So voluntary association, anyone who is they are coming and joining in the company. The shareholders are coming in the company and joining the company by buying the shares by their own wish. No one is forcing them to join the company. It is a voluntary association. Those who like the company, they will buy the shares and they become the owner of the company. They invest the money in the company. Those who do not like the company, they will sell their shares. They will sell their shares and go out of the company also. You have a free rights. It is up to your will, your interest. If you like the company, you buy the shares and become the owner. If you do not like the company afterwards also, you can sell the shares and go out of the company. No one is forcing you. So it is your will to stay in the company or leave the company. So this is a voluntary association. And another feature is artificial legal person. A company is an artificial person created by a law. Who has created the company? A company is created by a law. A company is an artificial person because the company is compared with the person. But company is how company can become a person. So we can say company is an artificial person, like a human being, but it is artificial human being. Like human being is given birth by mother. Every human being, we have mother who gave us birth. Mother gave birth to us. A company who give birth, the company is also like a human being, but treated here not exactly human, not a real human being, but it is a human being here. As from the point of view of commerce, company is treated just like a human being. Why? Because company is just like we human being. Mother gives the birth to the human being. Company is also given birth by the law. Law has given birth to the company. Company will not come like that. Company is born after the registration. As soon as a company is registered, a company is said to be born. You take the birth as soon as the registration completes. So this is company's birth, the birthday of company. On which day it is registered, that is the birthday of company. A company has a birthday. When it is registered in the registration office, that day is the birthday of company. That day company is taken as a birth. Now after the birth, we'll keep a name of the company. Company has a name like a human being. We have a name for our identification. Every individual human being has a name. Every human being has a name. Company also has a name. Reliance Company Limited is name. X Limited Company, Moonlight Limited Company, Sunlight Limited Company, Sunrise Limited Company. Is it? So Tata Birla Limited Company. So every company has name. Surya Limited Company. So in this, every company has a name like a human being. So company is an artificial person. So it comes to the contract with other. Company can do a contract also to any. So it holds property in its own name. Like we can say, I have a building. This building belongs to X. X is a person. This building belongs to Y. This building belongs to Z. Z is the owner. This car belongs to This bus belongs to BD Memorial School. Whose bus is this? This bus belongs to BD Memorial School. BD Memorial School bus. So how BD Memorial School bus can be there? BD Memorial School is an institution. Then? So a company also holds a part. That means BD Memorial is also an artificial legal person. A company. Whose car is this? This is company's car. Reliance company car. This is Reliance company bus. This is company's building. Company holds the property. Because company can hold the property in its own name. Similar liability also company has to pay afterwards. If there is any case in the file, company has to face the legal aspect, anyone has filed the case to company has to face the legal procedures also. So it is the liability of the company. Any company can make a contract to anyone. So from this point of view, company holds every assets and liabilities in its own name. Like company has to repay back. Company has taken a loan from the bank. Company has taken a loan from bank, not shareholders. Shareholders are not liable. Company is liable to pay that loan. So this is the artificial legal person. So company is a person here, but company is an artificial legal person. So company from this point of view, company is an artificial legal person created by the law. It holds every assets and liabilities in its own name. So this is the artificial legal person. So in this way, these are the features of the joint stock company. So very important topic for you, and this is the end also. So no need to give more. The main points are artificial legal person is the main point. Perpetual succession, common seal, transferability of shares, separation of ownership and management, separate legal existence, separate legal entity. These are the very important features of the company. The important features are company is an artificial legal person. Artificial legal person. So artificial legal person is a very important topic. Company is an artificial legal person. You have to explain artificial person. How it is artificial person? Artificial person. So company is a legal artificial person created by a law. How company created by law? Company is created by law by registration. Company takes the birth after the registration with a perpetual succession. So separate legal entity and perpetual succession. Perpetual succession means company goes forever. Company life of the company is permanent. It will go forever. Perpetual succession. And common seal. The company is artificial person, but it is artificial person. No hands to sign. So company has a signature as common seal. The name of the company is engraved, and that seal is utilized in all the official documents of the company, and that makes the documents more valid. That the seal is in the hand of the board of directors. So artificial legal person, so separate legal entity, perpetual succession. So artificial legal person, limited liability. The risk of the company is very limited. The liability of the company is up to the face value of the shares purchased by them. The share purchased by them. So this is the features of the company. So company, this is the completion of chapter number 7. Chapter number 7 is also completed. Only the meaning of company, joint stock company, the definition of company. Company is an artificial person created by a law, having a separate legal entity with a perpetual succession and a common seal. This definition you have to mark up, explanation of the company and the features of the company. At least these features you have to, very important: separate legal entity, perpetual succession, limited liability, transferability of the shares, common seal, separation of the ownership and control. So voluntary association, artificial legal person. So these are the very important features of the company. You have to make a note on this and note down in your copy, and you should be able to write the features of the company. So this is the end of chapter number 7, joint stock company. So this is chapter we have completed now. Chapter number 7, only the meaning, definition of the joint stock company and the features of joint stock company. So our next chapter is cooperative society. So that is chapter number 8. So this much for today. So hope you have understood. If any doubt, you can ask. You can send message in my WhatsApp number in the group. You can again ask what is the problem. So I will explain that topic. So just write this exercise. This write a question. What define a company? Explain the features of the company. Just now we have around 8 features. Explain all the features of the company. Okay, features of the company. Write the answer. When the school reopens, I'll check your copies. So this is the exercise for you. And what is a company? Explain and explain all the features of the company and give a definition of the Jonista company. This definition, right? Jonista company is an artificial legal person created by law, having a separate legal entity with a perpetual succession and a common seal. This definition you note down and explain the company. Make one note of the company and write all the features. I've explained that features you note down. So this much only in this chapter. So study well, utilize your time. Okay. So this much for today. Thank you.